Hello, yo, what's good and what's up, amazing people? Yo, welcome to the Elevation Lab. Again, I am your host, Rick the Billionaire. I would love to begin by apologizing for the previous session that I did. My internet was such a mess. I know the audio quality is a mess, especially towards the end. And on today's session, I'll begin by definitely doing a small recap on the same, just as I had promised on the description down below. And after that, we're going to dive into today's session. For today, I'll be showing you guys how to. First, I'll be teaching you guys what support and resistance is, and also how to identify major support and resistance levels. And yep, stay tuned all the way to the end. I hope you guys are getting value. If you're getting value from this content, don't forget to comment on the section down below. Also give me a thumbs up, share it with a friend. Help me grow this community, help me grow this space. So without much further ado, let me share my screen and let's get to it. I hope you guys are having an amazing week. My week so far is good. I'm profitable. For the week, I lost a trade yesterday, but yeah, it is what it is, man. So on our previous session, I was talking about swing points and substructures. I was speaking about swing points and substructures, and we said we have instances where at times the market will move in this way. You'll find the market forming higher highs, then in between the market creates, of course, a higher low, then lower highs, and something that looks like a lower low, but it's still a higher low. Then again, the market keeps on pushing, and oftenly you'll find the market doing such. So from my opinion, most of the time the market will always do this to distract people, or maybe to get people into going to the opposite direction. Yeah, and this right here is what I refer to as a substructure. Yeah, so for a substructure, for you to be able to clearly identify structure, the first and the most important thing is always to identify the swing points first. You first identify the swing points. And what are the swing points? The swing points are where the move began from, and also where the move came to an end before the pullback started. For instance, we have this point right here and this point right here. Plain is the swing point. This simply means now this right here, from this level to this level, this is where we had our swing from our lowest point to our highest point before prices started correcting the move. So basically, that's always the first step to identify. And once you've identified your swing point, now it gets easier for you to be able now to say, yes, price has moved towards this zone, and price hasn't yet broken my swing. And yeah, we haven't broken structure yet, or price has moved past my swing. We've broken structure, and this is the direction that we are going towards. And once you are able to do so, then it gets easier for you to avoid getting manipulated, yes, or even getting faked. And I'm going to show you this happens all the time. This happens all the time. Price will always do the same thing. And previously I'd already started showing you guys same example on the charts. I'm going to show you again. Currently we're on the daily time frame. Let me go to a much lower time frame, like the 4-hour. Then you guys will be able to even see it better. I would really want to remove this. Let me just remove all the drawings. I'll get back to it. Remove drawings. Good. And then tilt like that. Okay, so let's say, for instance, let's take an example. Let's take this example. For instance, you guys are able to see we have this. Let's begin from this lowest point. Looking correctly into this, you can see this right here. was our last swing point. Why am I saying this was the last swing point? Because this is where we had the last pullback. After this entire push that gave us a lower low, price pulled back to give us a lower high. Then we had again price push past this lower low to give us a lower low. This simply means now this right here, this point and this point, at that particular time, this were the points that were playing as the swing points. So once price pushed up, we saw price come to this zone, then price never got to take out this zone. So this simply means that our downtrend structure this particular time was still maintained, yeah, until the time that we saw this move begin to push price up and close above this point. So now we can say price broke structure and created a higher high on the 4-hour time frame. Then price pulled back and gave us a higher low. Then price again pushed all the way up. If you guys are able to look closely, you can see again this move from all the way from this point to this point again. This is nothing but a pullback. We have this area. We have this area where price paused. You can see we have this area where price paused. Again, how do you get to like quantify a swing point? There are different ways. The market will always like use a lot of techniques maybe to manipulate people. Sometimes we'll find the market is moving like this. The market will move, let's say, towards the direction. Then instead of moving on an opposite direction, the market will do like one candle pause, then start consolidating around that same area. Then the market keeps on moving. So my question to you is, would you guys qualify this as a break of structure? If price comes back to this area, do you guys qualify this as a break of structure? For me, it's a no. Why? Because for me to qualify something as a pullback, I need to see price coming to the opposite direction. That's what we call a pullback. A pullback, it's a scenario where we want to see price moving like this. We want to see price push, and instead of consolidating, we want to see price like a decent move. If you use the Fibonacci tool, we're going to speak about the Fibonacci tool as we go on. If you use the Fibonacci tool, you can even be able to read the retracement on the retracement levels, then the market push. So once price now pushes past this, for this second scenario, you can say truly now this is a break of structure. But for the first scenario where we have a price just push, then minor consolidation, this is price moving not to the opposite direction but sideways, yeah, then the push continues. This basically is more like a reaccumulation of orders, then price keeps on going down. And for me, I honestly don't qualify this as a structural point, yeah. So this right here and this right here are going to be my structural points, yeah. So again, back to this, you can see price created this higher low, then gave us a push, then price started coming again down, creating lower highs and what looked like lower lows, lower highs, lower lows, lower highs, lower lows. Again, it's always important to note, again, the question I said you should be asking yourself is, where did our move begin from? And you can see this was where we had the first move that broke structure. From this point to this point, this is a swing on its own, yeah. Then after the pullback, we have another push to the upside. This simply means, again, this right here, from this point to this point, that's a swing on its own. And you guys can clearly see price came all the way down here. Maybe someone looked at this point here and said, oh, we've broken structure. And then they started like looking for short positions. And you can see the market kept on pushing up. Why? Because we had not yet broken our swing point. And you can see this is why I'm saying it's really important for you to first always identify the swing points, because once now you've identified the swing points, it's easier now to qualify a break of structure. Because if this price could have pushed down below this joint here, and then we would have said, yes, we've broken structure and maybe we should be looking for good pullbacks. Again, we'll get to tackle we'll get to learn about weak lows and strong lows strong highs and weak highs, just to be able to identify structure in a proper way. So I believe like you guys can go to whatever time frame. You can go to whatever time frame. You shall always see the same thing. Let's go even to the 1 hour time frame. And then let me get rid of this to have like a clear background. Okay, check this out. Yeah, let's get to somewhere different. Let's not use the same example. Okay, check this out. We have this scenario where this is the 1 hour chart that I'm looking at. Of course, you can see price moved from this point. Let's begin from this point. Pushed up. This was our most recent lower low. Then price gave us a lower high, then equal lows. Then price pushed up, broke structure. But again, don't forget, this is the swing point right here. This is the swing point, and this was the swing point. So it's really important. Remember, if you're taking buys from here, price could go either way. Price could still keep on pushing to the downside. So if you take buys from here, should be very cautious. This could be a break of structure or a manipulation. It depends. But you can see price kept on pushing, then took out this high and took out this other high to give us a higher high. Then again, price pushed to the opposite direction, then a minor consolidation, and we saw price push again all the way to give us a higher high. Then from there, you can see a break of structure because price pushed crazily, took out this low, all the way down here. Then consolidation, and we kept on pushing to the downside. I'm really trying to look for, yeah, come here, let me show you guys. We have this scenario here. Where you can see price you can see price pushed all the way down. Then we had this minor pullback. Then price again pushed down, gave us a lower low. Then price again tried pushing up, slightly closed above our structural zone. Again, it's always very important to like operate on higher time frames. For me, I always prefer staying on higher time frames, because higher time frames, especially the 4 hour, this lower time frame, 1 hour, 15 minutes, 5 minutes, they are mainly, or rather I mainly use them for trade executions. But I always look at my charts from the weekly, daily, and the 4 hours. So again, you can see we had this scenario where price looks like it broke structure. I'm certain if we go to the 4 hour chart, it will be just like a minor body outside. Then price again pushes down. Maybe somebody down here is already waiting for buys. Then they get whooped. Then I would use the same example to show you, or rather to be able to identify swing points together. You can see we have this area here where this move began. Remember, this is our most recent, right here. It's where we have our most recent lower low, right here. And then this is the highest point at this particular time. So as long as price doesn't go below this area, this simply means that the structure of an uptrend will be maintained. Why? Because we saw price go above this zone. Yeah. So the moment price pushed past this zone to create a lower low, now we are able now to identify our new swing points, which is where, of course, this is where the move began from. Why? Because you can see this is where the push started from. This is where the entire swing began from. So this right here acts as our swing point or our range. Then again, this, once we took this low out, this point now became our new lower low. So it's really important, because you are also able to see the same thing happening. Price pulling back, coming to this point, where potentially somebody could say, oh, you know what, we've broken structure, and you can see price even never got to go past this, because you can see price pushed again, gave us a lower low, then price created equal lows, pushed, price never took out our swing point. Again, it's more like being able to identify swing points, it's easier to avoid getting like faked out and all that if you are in a position to properly identify swing points. Yeah, that's it. I believe that was a good recap. Again, the same thing always happens. You can see we have substructures. You can see price pushed down, then a minor consolidation, then we go up. This right here looks like a break of structure, so somebody would be looking for buys here. Then really that wasn't the case. You can see price kept on pushing to the downside. So it's always very important to be able to identify swing points. Once you are able to identify now the swing points, it gets easier for you because you won't be faked out easily because you've been able to identify swing points. You can see lower high, lower low, then price creates a lower high, then a higher low, then higher high, higher low, then higher high. Remember, we don't go past this swing point. Somebody already could probably have seen higher lows and higher highs and started buying. But remember, a break of structure is the only thing that will always signify a change in direction. So don't get confused. So on today's session, I would want us to learn about support and resistance. And let me introduce support and resistance. Then I'm going to show you guys how to be able to properly identify strong areas of support and resistance. And this zones you're going to, for this, you're going to be tackling weekly and probably daily zones, because these are like the strong areas of support and resistance. So anytime that we talk about support and resistance, I'll begin by just mapping out market structure. I'll just like do like a simple form of market structure. Just a simple form of market structure. So let's say for instance, anytime we get to see price, let's say for instance, we have like this first swing point. Anytime we get to see price come to a point, anytime we get to see like price, how do I get to explain it? Okay, we have this scenario where price pushed to this point right here, which I would love to call it, let me even make it look more perfect, just to have you like better understand support and resistance. So let me make it look like perfect, but of course it doesn't look as perfect in the real chart. So look at this. You have a scenario where price comes up and faces a rejection. So this is how I'm going to define resistance. I'll begin by resistance. Resistance, to me, I would define it as a ceiling. And when I say ceiling, I mean this is a place, or rather a point where now we have price gets there, then there's let's say the number of, let's say we were buying, find that the number of buyers, or rather the number of buyers here, it's getting overwhelmed by the sellers who are coming in the market at that particular time. So for that case, price gets to face what we call resistance. Any price, it's getting pushed to the opposite direction. So that's how best I can define resistance. So I'm defining it as a ceiling. It's like you're trying to jump outside your ceiling, keep on trying. Then anytime you hit the roof, you get to bounce back. But at times, maybe from you keeping on trying, you'll make the roof weak, and probably at long last you'll be able to like break outside the roof. Yeah. So once you break outside the roof, now you've broken what? You've broken resistance. So again, remember, resistance is this point where price keeps on getting rejected, where we can say price, according to structure, we had this push where now the sellers now start overwhelming the buyers at that particular time. That's like resistance, price getting rejected, higher prices rejected, higher prices getting rejected. And at times, when resistance is broken, at times it gets to turn to become support. And I'll define support as a flow. For instance, after this pullback, after price faced resistance, then started pulling back, we can see we had like a massive pull. Sometimes price will like keep on rejecting an area for the longest time. Maybe these are like buyers trying to accumulate enough orders to break the zone of resistance. And once price pushes to break that zone, eventually that zone automatically turns to become support. And I'm going to define support as a flow. And this is where like most buy orders are likely to come in. And during this point, this is where I believe buyers again get to overwhelm the sellers. And now we can totally say this is what's currently acting as our flow. Remember, if you keep on jumping on the flow, you might end up like making it weak and can also get to sinking. So this right here, at this particular time when price was coming up, this was playing as our point of resistance. Price would come, reject. Then we saw price now come back, more buy orders coming into the market, pushing prices high, breaking this resistance to give us a higher high. And now the resistance turned into support. You can see price respecting this zone, then pushing to take out the next area of resistance, which is right there. Again, price breaks it and eventually gets to turn into support. So basically, that's how I can define support and resistance in the most simple language, just to make you understand better. So for this, I'll definitely be using the candles. We can be able to. Okay, they're different. I'll begin by saying there are different ways of identifying strong areas of support and resistance. One way is that you can use, instead of using the candlesticks, you can use what we call a line graph. A line graph is also a price action tool. Some people maybe analyze the charts using a line graph. And this right here is how a line graph looks like. And when using a line graph, this is what you'd really be looking for. You want to see what areas, currently I'm on the monthly time frame. You want to see what areas, or let me just get back to the weekly. I believe we can do the same thing over and over to the monthly, maybe weekly. You want to be looking at the areas with the most rejection. This is one way. Again, I'll show you two ways to identify strong zones. One using the line graph and the other one using the candlesticks. So we want to be able to identify the areas. So now we have to like zoom in correctly. Yeah. Again, we just want to focus on where our price is if you don't want to clutter your charts. So we would be looking for areas where we can see a lot of rejection happening. For instance, we have this zone where we can see at this particular time, even coming back, you can see there was rejection at this area, again rejection at this area, again at this particular time this area acted as a resistance area, rejection, then again turned to support, rejection. You can see again rejection, rejection, rejection. Then we also have this particular time price kept on rejecting, rejecting, rejecting. So this is a zone where you can see there's so much rejection happening. So this simply means this is a very strong support slash resistance area. Again, just go out mapping all the zones where you are seeing like strong resistance, or rather strong rejections. Sorry. For instance, you can look at this other zone, yeah, where we have a rejection at this point, a rejection at this point, another rejection, another rejection, another rejection, another rejection, some more rejection, again rejection. So again, this simply means again this is also a strong zone. Again, same stuff. Right here you can see we have another zone. we have another zone where, let me place it properly. Let's see where we can get like the finest rejections. Avoid having like too many lines. We have this zone right here. Of course, rejection, rejection, rejection. Then there's another zone right here. There's another zone right there. Rejection, 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 rejection. So I'm basically finding the zones with the most rejection. And if you guys are keen enough, you're able to see. I'm trying to look at zones where we have like mostly this pattern. You can see most of the zones that I'm mapping out, they have some sort of patterns here, just to get like those areas that play mostly is key resistance and support areas. So if we go back to the candlesticks, and now you guys can be able to see price will always tend to move from zones to zones, and this is the first way to identify strong areas of support and resistance. But personally, I don't map out support and resistance using, I don't map out strong zones using the line graphs. When I started out, I was using the line graphs to map out strong areas of support and resistance. But with time, I began using the candlesticks to map out strong areas of support and resistance. Because with the line graphs, it wasn't that accurate, So yeah, that's how you can do it. Of course, you can see price rejections. The same rejections are out here. You can easily read out rejections, and the same thing that I did, you can also do the same on the daily time frame. And also get to do the same on a daily time frame and all that. So that was the old method that I used to use. So now I'm going to show you like how personally I map out strong areas of support and strong areas of resistance using the daily chart. Using the candlesticks. First thing, it's really important to be able to identify either weekly highs and weekly lows. For instance, let's say we have this push here. This was the previous day. Yeah, this simply means okay, I'm going to teach you strong zones and also how to follow along with trades as they move. So for instance, after price created this strong, this is referred to as a bullish engulfing, or rather bullish candle, we can see price took out our previous days. That was the previous day high. So in most case scenario, this zone here tends to turn out to become the point of support because this was the highest point at that particular day. And again, highs and lows, weekly highs, daily highs, weekly lows, daily lows, these zones eventually turn out to become strong areas of support and resistance. But that's one way to identify good zones, and that's a better way, especially when you are following along. Let's say you are an intraday trader, you just want to follow along the flow of orders. If you want to look for target areas, of course, zones are mainly used to know target areas, maybe best areas to look for entries from. Yeah, that's how zones basically are well used. So to be able to identify strong zones without using the line graph, we do use structure. But for structure now, we want to identify the key structural point. For instance, we have this scenario here. We have this scenario where we had our price. This is the weekly chart. We had our price. We have this scenario where we had price push from this point, then pushed up, created equalize, then we saw rejection. Then after that, price now pushed to take out this overall structure. Remember, this right here and this right here was the swing point. So this simply means after price, this zone here, this simply means this zone right here, that was broken. This was a zone where structure was broken. So this simply means now this right here is a key level. Why? Because at one particular point it was playing as a resistance. You can see price, it was, first of all, it was a structural point, it was a swing point. Price wasn't going past it, but once price came back, then rejected and pushed up, we saw price took it out. And you guys, even when we go back, you're able to trace the same thing. You're able to see the zone having so much rejections. So this is how you do it. Basically using structure. Just find like nice structural points. Follow structure, find nice structural points. Also, you can use like strong highs and strong lows. For instance, this right here, this was a strong rejection. I'll probably teach you guys on weak lows, strong lows and all that, but you can see we had a strong rejection here, which gave us this pullback here. So again, you can also get to map out this zone here is a key zone, and you can see price came here and rejected. You can see another rejection and so on, price rejecting. So basically that's how you like get to identify. Look at this, another area. This was a key area. Why? Because we saw price pushback, then we have this was a strong rejection, then especially zones with strong rejections, they end up being like key support and resistance zones. So this was a strong area where we had strong rejection before price pushed to take it out. So again, even if you go back, you will realize this is a strong area of support and resistance. Strong area of support. Price would come here, then bounce off. Price would come here, you can see rejections happening. So basically that's how I do identify zones. Again, same thing, you can see we had a strong rejection over here. We had a strong rejection over this zone that pushed price up. So if I mark out this zone clearly, you'll be able to see, you can see there was rejection on this zone, rejection. Then even if you go back to the past, same thing is happening. The place was still playing as a strong area of support / resistance. So now once you're able to map out your zones, now it gets easier, because remember, price will always move from one zone to the next zone, one zone to the next zone, one zone to the next zone. So once you do that, becomes easier for you now to understand where could we be going to, and once you do that, it's game over for you. It's easy. Becomes really easy. So I believe I shared some great value with you on this session. Probably I'll be tackling, but not much, on supply and demand. Supply and demand is more like so broad. I would really want you to like pursue more info from various sources, but I will do like a brief supply and demand, just to give you like the picture. Then probably do another video on how to use the Fibonacci tool. Then probably do another video on how to do, most definitely use another video on how to use the volume profile tool to identify order flow properly. And I believe if you go like through all the content that I'll have posted over and over repeatedly, you'll end up like gaining so much from it. So again, that's it guys for today. That's how you can identify strong weekly zones. The same thing you can do on daily. If you want to identify your zones on daily, same stuff. Just find areas of strong rejections, key structural areas, especially areas where price had strong rejections, or previous daily highs or weekly highs, weekly lows. Those areas serve as strong areas of support and resistance. So that's it guys for today. Don't you forget to give me a thumbs up leave me that comment. Let me know what you've learned. Let me know if you have any question. Drop it on the comment section. I'll be kind enough to respond to you. So that's it for today. Have yourself a good weekend. Thank you so much, guys, for watching to the end. Stay blessed. Peace.